Sri Lanka's capital market. It sounds complex, doesn't it? But at its heart, it's a system. A system designed to connect those with money to those who need it for growth. Think of it as a grand meeting place for capital. Businesses need funds to expand, to innovate, to create jobs. Investors, on the other hand, seek opportunities to make their money work harder. The capital market is the bridge. It channels savings and investments between suppliers of capital and those who are in need of capital. This flow is vital for any growing economy, and Sri Lanka is no exception. It's all about creating wealth and opportunity. The structure itself is quite logical. It's primarily divided into two main segments. You have the primary market, and then you have the secondary market. These aren't rival markets. They are complementary. They work in tandem, each playing a distinct but crucial role. The primary market is where new securities are born. Think of it as the showroom for brand new financial products. Companies and governments come here to raise fresh capital. They issue stocks or bonds for the very first time. It's the initial offering, the grand debut of a security into the financial world. Then comes the secondary market. This is where the action continues. Once securities are issued in the primary market, they can be bought and sold in the secondary market. Let's delve deeper into the primary market. This is where the magic of creation happens. It's the birthplace of new securities. Companies, big and small, often reach a point where they need significant capital. Perhaps they want to build a new factory, or launch a new product line, or even expand into international markets. Borrowing from banks might be one option, but issuing shares to the public is another. This is done through an initial public offering, or an IPO. It's a company's first sale of stock to the public, a major milestone indeed. An IPO is a significant undertaking. The company transforms from being privately owned to publicly owned. This means new responsibilities, more transparency. But the reward, access to a vast pool of capital from investors. These investors, by buying shares, become part owners of the company. They share in its profits, and potentially, its growth. The primary market facilitates this crucial fundraising process. It's not just about shares, though. Companies can also issue corporate bonds. Now let's focus on a specific, very important part of the primary market: government securities. Governments, like Sri Lanka's, regularly need to borrow money. They do this by issuing various types of debt instruments. We're talking treasury bills, which are short-term, and treasury bonds, which are longer-term. These are essentially IOUs from the government. You lend the government money, and they promise to pay you back with interest. These are often seen as the safest investments in any market. Why? Because they are backed by the full faith and credit of the government. The issuance of these government securities is a structured affair. It doesn't just happen randomly. The Central Bank of Sri Lanka plays a pivotal role here. It acts as the agent for the government. It announces auctions for these securities. This is where a special group of players comes in, the primary dealers. These are financial institutions, banks and some non-bank financial institutions, specifically appointed and authorized by the central bank. Their main job? To participate directly in these auctions for government securities. With all this activity in the primary market: IPOs, bond issuances, government securities, there needs to be a watchdog, someone to ensure fair play, someone to protect investors. In Sri Lanka, that crucial role is played by the Securities and Exchange Commission, or SEC. The SEC is the apex regulator of the capital market. Its mandate is broad, but its core mission is to ensure market integrity and investor protection. This is paramount. Without trust, markets simply cannot function effectively. People won't invest if they fear being cheated. In the primary market, the SEC's oversight begins even before an issue is offered to the public. When a company wants to launch an IPO, it must prepare a prospectus. This is a detailed document. It contains all the vital information about the company, its financials, its business plans, the risks involved, and the terms of the offer. The SEC reviews this prospectus meticulously. They check if all required disclosures have been made. They ensure the information is accurate and not misleading. This isn't about the SEC judging if it's a good investment. No, that's for the investor to decide. Section 5. The Investor's Arena: Understanding the Secondary Market. Once securities have made their debut in the primary market, they enter a new phase of life. This is the secondary market. Think of it as a bustling marketplace. Here, investors buy and sell existing securities from each other. The company or government that originally issued the security is not directly involved in these transactions. The Colombo Stock Exchange, or CSE, is the principal marketplace for trading equities and corporate debt in Sri Lanka. It's where the action happens day in and day out. This market is absolutely vital for a healthy financial system. Why is the secondary market so important? Two key reasons: liquidity and price discovery. Liquidity, as we've touched upon, is the ease with which an investor can buy or sell securities. Imagine you bought shares in an IPO. What if you later need that money for something else? The secondary market allows you to sell those shares to another investor. Without this, your money would be locked in. This ability to easily convert investments into cash encourages people to invest in the first place. Section 6. The Colombo Stock Exchange, a pillar of the economy. The Colombo Stock Exchange, or CSE. It's the heart of Sri Lanka's secondary market for equities and corporate debt. Established in its current form in 1985, the CSE has a rich history. It has evolved significantly over the decades, from a traditional open outcry system to a fully automated modern trading platform. This journey reflects the broader changes in global finance and Sri Lanka's own economic development. The CSE is more than just a marketplace. It's a critical institution that supports capital formation and economic growth in the country. The CSE plays a dual role, which is quite interesting. It's not just about the secondary market, it also plays a crucial part in the primary market. How so? Well, when companies decide to go public with an IPO, their shares are eventually listed on the CSE. This listing provides the gateway to the secondary market. The CSE sets the listing rules. These are requirements that companies must meet to have their shares traded on the exchange. These rules cover aspects like financial health, corporate governance, and public shareholding. This ensures a certain quality of companies listed on the exchange. Section 7. Trading in the digital age. CSE's electronic systems. Gone are the days of shouting brokers on a chaotic trading floor. The Colombo Stock Exchange, like most modern exchanges, operates on a sophisticated electronic trading system. This is known as the Automated Trading System, or ATS. It's a fully computerized platform. All buying and selling orders are entered into this system electronically. This has brought tremendous efficiency, transparency, and speed to the trading process. It allows brokers to trade from their own offices. It connects them all to a central order book. Progress indeed. How does this electronic trading work? It's based on an order matching system. When an investor wants to buy shares, they place a buy order through their broker. This order specifies the share, the quantity, and the price they are willing to pay. Similarly, an investor wanting to sell places a sell order. These orders flow into the ATS. The system then automatically matches buy and sell orders based on a set of rules. Typically, price and time priority are key. The best priced orders get matched first. If prices are the same, the order that came in earlier gets priority. It's fair, it's fast. Section 8. Post-trade processes, settlement and depository. Trading is only one part of the equation. What happens after a buy and sell order are matched on the CSE's automated trading system? This is where the post-trade processes kick in. These are crucial for ensuring that the buyer actually gets the shares and the seller actually gets the money. Two key components here are the Central Depository System, CDS, and the settlement process. These might sound technical, but they are fundamental to the smooth and safe functioning of the market. Without them, chaos would reign. The Central Depository System, or CDS, is a computerized system that holds securities in electronic or dematerialized form. Think of it as an electronic vault for shares and bonds. When you buy shares, you don't get physical share certificates anymore, not in most modern markets. Instead, the ownership is recorded electronically in your CDS account. This eliminates the risks associated with physical certificates like loss, theft, or damage. It also makes the transfer of ownership much faster and more efficient. The CDS is a subsidiary of the CSE and plays this vital record-keeping role. Then there's the settlement process. In Sri Lanka, the CSE follows a T+3 settlement cycle for equities. What does this mean? T stands for the transaction day, the day the trade occurs. +3 means that the actual exchange of shares and money happens 3 business days after the trade day. Section 9. Upholding integrity. Market surveillance at the CSE. A fair and orderly market is built on trust. Investors need to believe that the game is not rigged. that everyone is playing by the same rules. To ensure this, the Colombo Stock Exchange has a dedicated market surveillance department. Their job is to be the vigilant eyes of the market. They continuously monitor trading activity. They look for any unusual patterns, any suspicious trades, or any potential violations of market rules. This is a critical function for maintaining market integrity and protecting investors from unfair practices. The surveillance team uses sophisticated technology. They have systems that can flag trades that deviate significantly from normal patterns. For example, a sudden surge in the price or volume of a particular stock without any apparent news might trigger an alert. They also look out for potential insider trading. The gatekeepers of the exchange. Stockbrokers as intermediaries. Stockbrokers are pivotal players in finance, connecting buyers with sellers. Without them, the stock market would be chaotic. They are licensed professionals guiding through stocks and shares. Their role is fundamental to an orderly marketplace. They ensure smooth transactions with trust. In the secondary market, they drive daily trading activity. They manage the ongoing life of existing securities. This churn allows investors to enter and exit positions. Brokers facilitate transactions, securing the best prices. This process demands sophisticated systems and accuracy. Once a trade is matched, brokers confirm and oversee settlement. Beyond execution, they offer market expertise and research. They analyze company performances and economic trends. They provide insights to help investors make informed choices. This guidance is crucial for new investors. They explain risks and suggest tailored investment strategies. Ethical and competent advisory transforms brokers into trusted partners. Stockbrokers are essential for a functional and efficient market. They bridge the gap between buyers and sellers, ensuring market fluidity. Their expertise and guidance add significant value to investors. In essence, stockbrokers are the engines of the stock market. Unlocking the market. The Central Depository System (CDS) account. A CDS account is like a bank account but holds investments electronically. It revolutionized securities ownership and trading in Sri Lanka. Paper share certificates are now largely obsolete. Ownership is recorded digitally, boosting efficiency and convenience. To trade on the Colombo Stock Exchange, a CDS account is essential. Opening a CDS account starts with selecting a stockbroking firm. Proper identification and proof of address are required. The stockbroker submits the application to the Central Depository Systems. The CDS account links you to your investments and the market. Every buy or sell order is tied to this account number. Shares are electronically credited or debited from the account. This system simplifies the trading lifecycle and enhances accessibility. Electronic transfers of ownership are quick and secure. The CDS enhances market liquidity and investor responsiveness. It also simplifies corporate actions like dividend payments. The CDS is a crucial component of modern securities management. It provides a secure and efficient way to manage investments. The lifeblood and the compass. Liquidity and price discovery. Liquidity measures the ease of converting shares to cash and vice versa. A liquid market is healthy, allowing easy trading without price disruption. Stockbrokers enhance liquidity by connecting buyers and sellers. Price discovery determines a share's fair price through market activity. It reflects the collective judgment of investors. Electronic trading platforms ensure transparency and real-time pricing. Stockbrokers facilitate access to these platforms, fostering market trust. Section 4. The Watchdogs. Investor protection in the Sri Lankan market. Markets thrive on trust, safeguarded by rules and regulations. The SEC of Sri Lanka is the chief regulator, ensuring market integrity. It licenses intermediaries, monitors compliance, and imposes penalties. The Colombo Stock Exchange also functions as a frontline regulator. It enforces listing and trading rules, ensuring fair market conduct. Companies must disclose material information regularly. Insider trading rules prevent unfair profit from non-public information. Dispute resolution mechanisms provide avenues for investor redress. These protections create a safer investment environment. Section 5. Fueling growth. Primary and secondary markets in harmony. The primary market is where companies raise capital by issuing new securities. Stockbrokers play a role in managing these new issues. The secondary market is where existing securities are traded. It provides liquidity, allowing investors to buy and sell shares. The primary and secondary markets are interconnected. A vibrant secondary market encourages participation in the primary market. Together, they drive economic development by funding business growth. They create employment, increase tax revenues, and improve living standards. A well-functioning stock market is vital for economic infrastructure. Section 6. The Digital Frontier Technology Reshaping the CSE. Technology has transformed capital markets, including the Colombo Stock Exchange. It enables faster trade execution and enhanced market access. Online trading portals and mobile apps empower individual investors. Fintech innovations like robo-advisors and AI are reshaping the market. Blockchain technology enhances security and transparency. Technology automates routine tasks, allowing brokers to offer personalized services. It enhances efficiency and expands capabilities. The synergy between digital tools and human expertise defines the future. This combination fosters a more efficient and robust capital market.